Hi everyone, Frederick here, Simple System Trading. New video out, showcase, use case from one of my clients, Peter. Peter's been trading the opening range breakout, has defined a strategy around that, and he's testing it and he's experimenting with a few additional things. So this video is a bit more advanced. I will not go through a simple system signal study here. I will go through the actual question that Peter asked, and I'll throw it in here. He's basically having a 1 minute chart with an OR, a signal study defined that takes his trades, and he's happy with that. He's got 2 targets and a trailing stop that gets started, triggered after a certain amount of movement. The trailing for the long is this green line. It's overlaid from the EMA of the 5 minute chart, and the red line is used for the short side. So far so good. That's all working. Using the AT for his management and entry. What he'd like to do right now is if he gets stop out on his second contract, so only then, he wants to be able to re-enter. And he wants to re-enter when price steps above that red moving average again. So he has that EMA from the 5 minute chart, it's the blue line. He has 5 points below, 5 points above. And basically if the long gets stopped on that second contract only, then he wants to re-enter when the price is hitting that top moving average again. So that's the use case. And that's what we're gonna go through. Again, this is an example. It's not a recommendation you go start trading this chart book live. It won't make you money because yeah, you have to identify that yourself. You have your own risk parameters. This is an example. It's not a complete trading system. A few settings has been changed as well. So Peter doesn't give away his edge here. You have to do work, and I provide some tools with which you can do it. So let's dive in. The study list here. The chart book will be below the video. I'll do a quick go through a few of the studies, and then the AT settings, and then the construction of the additional reentry. As you can see, there's quite a longer list of studies right now. If you use these studies and you need to refer to a price or another study subgraph, you need to make sure that the order in which the studies are listed, that's important. You see the calculation order here as a last thing. You have to make sure that if you reference a study, that it's calculated earlier than the point where you reference it. So that's why the SSTAT is all the way below, to make sure it's calculated last, because it needs all the inputs, or most of the inputs, from studies that are calculated earlier. So that's a little side note. Opening range. Peter uses the high-low for time period extended study. It's built in the Sherry chart. If that's not your something you like to use, I have a free one in the free bundle. So you can get the free bundle on my website if you didn't do it yet. There's the opening range high-low study. If you look at that, there's 2 modes there, bar-based mode or time-based mode, and you can use that to define your opening range. Have 2 subgraphs there, which is useful. It's not used in this chart book, but you can play around. What does Peter do as well? He subtracts and adds a bit from the opening range subgraphs to use those. He has a EMA overlaid from the 5 minute, and he uses that EMA to define a long and a short, EMA to trail, and that's the green and the red line. That's all good. Then he has a long signal defined and a short signal defined. Won't go into that. check out earlier videos on how to construct those. There is also a short and a long visual. That's a color background based on alert condition. Just a quick reference on where those signals occur. You can see that with that background color. And then there is the AT, the SSD AT version 2 in this case. You can do this with the version 1 as well, but since the version 2 is out, it's way better than 1. We're going to use version 2. Let's have a look at what's being used there. We take longs and shorts here. We have a stop and a target order. We set the quantities here. So we're going to use 2 targets. We can set individually. With those 2 targets set, we also need to set our maximum position size. In this case, that will be 2. I don't recommend you set it way high because it's really a risk limiter here. The AT won't take any more trades if that max position is met. So it's really something you should consciously set. 2 is good as we use 2 targets with a size of 1. Then we have the signal study. We're going to reference that here. The evaluation is intra-bar. We're going to do a maximum of 5 entries per bar if that intra-bar signal happens. Depending on how tight your stop is, you might not need that. But that's up to you. Entry order type, maybe good to explain how that works here. The stop limit order, it's a bit different. If you have a stop order, you set a long stop order price here. If that price gets hit, the stop price gets hit, it will become a market order and you enter there. With the stop limit, there's basically an additional setting that allows you to more or less set an amount of maximum slippage you agree to have with the filling of that order. If you bump through big time, with a normal stop order, you might get fill here. But with the stop limit, if it attempts to fill here, it doesn't get filled because you set that maximum limit to be this place. That stop order becomes a limit order, and you will have a limit order waiting below market price. So market needs to come back to fill you. That's what a stop limit order does. So this offset right here needs to be set. And that stop limit order offset is set in ticks right here. So it's stop limit entry price, a fixed offset in ticks. So it's a fixed offset from that stop price. So that's something that's set here. Stop limit order to enter that trade. What else? We have we don't cancel any waiting orders. I personally don't like it, but that's the way it's set now. But you could just to give you an example, you can set that to 10 bars. Just this case right here, there's an intra-bar moment. You could get a stop order out, and that never gets filled. See this bar right here? It could happen. Get that stop order, price doesn't really hit it, and moves up because this stop order entry price has a little offset here as well of 1 tick. So in some cases you might end up with an order not being filled. Then we basically have a normal exit based on target or stop being hit. We have a fixed target value. I set that value to 30. Peter uses different values. It's all up to him. The second target also set to fixed. We have no third one, so that's good. We have a fixed stop. I set that to 20 ticks. It's all arbitrary. I made it cherry picked here for this nice day to show you that this reentry thing works. So don't really get hooked up on these settings. You have to find your own settings. Move to break even, we're going to use that. So how this works is you have an initial stop, then you could have a move to break even if you use it. And if you further want to use a trail, that's the second thing that's gonna, or the third thing that's gonna get hit. So we have a value triggered move to break even. So 40 ticks. If that's done, the stop will be moved to break even with the offset, in this case 0. And then we also set to use a trailing stop to use a study subgraph to follow that. Then we have the trigger. The trigger is based on a target fill. So we're going to fill target number 1 here, and then that will trigger the trailing stop. And for the people that watch carefully, they see with the 30 tick target, that move to break even just doesn't happen because the trailing stop takes over. That 40 is never hit. The 30 is hit first, target is filled. There will be trigger for the trailing stop here. And the trailing stop is that long EMA and the short EMA, that red and green line. So those are being trailed when target 1 is hit. And then there's a max daily trade limit set to 5. So we hit 5 trades, we stop trading for the day. So that's basically it for the AT settings. Now the most important thing is the reentry. So what we need to construct there. So let's dive into that. All right, let's look at that reentry definition. We're basically moving from 2 contracts here to 1 contract here after that target is hit. So we need to identify, okay, we're in a 1 contract situation, and we need to identify that that stop was hit. So we go from 2 to 1 to 0. That's the first thing. Then we need to identify we went from 1 to 0 not because the target was hit, that's way up there, but because the stop was hit. And the stop was hit because we know that we trailed the stop on the green line. So we're going to identify the moment target position quantity is 0, that price is close enough to that green line. So we need to identify that as well. So we have from 1 to 0 at a price close enough to the green line. That's the moment we want to capture to look for a break of this line. And that's basically what we need to do. And to do that, we need basically some kind of memory, so to speak. We need to remember that a certain alert condition occurred and use that in the advancement of this strategy. To use that, we need a custom study. And lucky for you, it's a free one. It's in my free bundle right here. So you'll likely get it now. It's called Set and Unset Study Subgraph. And I've used it a couple of times here. Basically, I'll run you through it here. First thing I added was trading position quantity. It's a built-in share chart study. It has no inputs. It just produces a subgraph, which is set to ignore, with a value of your current position. And then I created a position 1 and 0 color bars based on alert condition. It's not needed, but you could get it directly from your trading position quantity study. But I just like to work with fixed numbers here. So I created those, and I'm using the set and unset to check for a long reentry. I call that check long reentry. You set and unset study, and that set and unset study needs two inputs. A input to set it and an input to unset it. So we're going to set it when the position is 1, and we're going to unset it when the position is 0. So that's what we use in the check long. So we set it to 1 here, and we set it back to 0 here. That's perfect because we can use that in our looking for long condition. We also need to identify that the stop happened at the right price. So that's the stop price color bar based on alert condition. And what's happening there is simple alert conditions based on the low of that bar around that green line price bar. So basically set a little band of 2 ticks around it, and that low needs to be within it. If that happens, we basically are close enough. We can assume that there is a stop order executed at that point. So we have that 1 to 0 and within the stop price, and that will basically be our long re-entry look. Right, that's this condition. We look for the re-entry when the moment we were in that 1 condition, and we flip to 0 quantity, and we are close enough that the stop price was being hit. So that's the long re-entry look set that's used in the long re-entry look set and unset study. So we have that condition, we start to look, that long re-entry look is now 1 in this moment. From this point here, that's a 1. And with that set to 1, we can start to look for that price there. So that's what you see in the following. It's basically the long combined. We had that OR condition for the original signal, and we want to see that my study 17, this one, the reentry look study, has been set. So this reentry look is set to 1, and we want to see that the close price, as we do with intro bar, that's perfect, is greater than that MA red line, the short EMA. If that happens, we get a signal. So that's basically, in short and quick and hopefully clear, how the combined signal study is made for the longs. So you need to puzzle it a bit and step it out. You make a few steps and basically control how this works. I will not do the replay. You can do that yourself, but you see that worked in this case. You can limit the amount of minutes in this video. So again, a little showcase on a re-entry. It might not be easy in this case. It's quite a lot of studies and a few conditions to identify, but certainly possible. But with this example, I also wrote down to have a look at creating a re-entry support study to work seamlessly with these SST-AT. And I will do that after my break. And then if it's done, when it's done, it will be added to the bundle. So re-entries is something that's on the roadmap for the SST-AT bundle, together with position sizing and risk management. So we can be a bit more flexible in when we want to trade certain size. So that's all on the horizon. I hope you like this other case study, and I hope Peter is helped as well. to experiment further with a re-entry. Thank you for your attention and have a good one. Bye bye.